Hi, everyone. I hope everyone's had the opportunity to enjoy this beautiful spring weather that we've had so far this week. I will say that the warm weather is adding some heat to the local real estate market and helping us move in the right direction. I wanted to get on video today and just give an overview of where we're at so far this year and what I'm expecting in the local real estate market as we move into the spring. I want to start by touching on interest rates, which has obviously been a big factor to the real estate market that we've seen over the past 18 months. Higher interest rates putting a lot of pressure on pricing and quelling demand in our local market. But there is relief in sight, although the Bank of Canada has made the announcement to once again hold the overnight rate. We're already seeing rates start to come down in 5-year fixed rate mortgages. So I think the banks are fully expecting for these rates to start dropping. My expectation is that we won't see any moves with the overnight rate until summer at the earliest, and even then there'll be incremental moves. But at least we're moving in the right direction, and the banks are starting to price those future drops in to the cost of mortgages right now. So look for that to improve, and that's definitely going to help buyer demand, buyer sentiment, and make buyers feel more comfortable transacting in this market. So let's jump into the numbers. So I want to start by saying that the last 2 weeks we've seen a market change in the real estate market here locally. We've started to see a big increase in buyer activity, specifically showing activity. I can say, at least anecdotally, that we've seen a big increase in showing activity across all of our listings, across all price points. So to be expected with the seasonality, but I will say this is a different feel than we've had over the past 6 months. So I want to explain. Before we jump in here, I just want to say that we're going to look at the Lakelands West overall to try to identify any trends in the market. I'm a little cautious about using micro market data this early in the season, specifically if we were to look at, say, Blue Mountains or Collingwood. It's just we don't have enough data at this point in the year to really draw any major conclusions. So if we look at the broad data, more data points, and we can look at what we might be expecting for trends or what we've seen so far this year. So for Lakelands West, you'll see here year to date, we're up 14.3% compared to this time last year. New listings up 14.5% as well. Active listings, this is significant. So we're up 42% in the number of active listings available. Months of inventory overall, we see we've got 7.1 months of inventory. That's the amount of time it would take to sell through all of the current inventory that we have on the market right now if nothing new came to market. 7.1 would be considered in favor of buyers, but not by a ton. So it's, we're somewhat balanced, certainly more than what we saw over the last few years where we were at 1 and as many as 5 back in 2019. So obviously very much favoring sellers during the COVID years, and now we've come back to balance, slightly favoring buyers. Average price down about 14% as compared to the same time last year. I wouldn't read too much into this number yet until we start seeing a few more sales go under contract. We'll have a better sense for our footing in terms of pricing. But we're definitely down from this time last year, but I'm just not sure exactly how much, but it is trending down. But look for that to stabilize as demand picks up and this interest rate environment improves. Days on market, somewhat unchanged from last year. 42 days on market, up from 36 last year. Up a ton since the COVID years, but back to what's historically been more normal in our market. So that's kind of a broad picture look. I will touch on a few of our micro markets. So the Blue Mountains, you'll see sales activity, like not many data points as we talked about here. So only 35 sales. So that's hard to pick up on any major trends. You'll see average price is down 22%, but that's mainly attributed to the fact that most of the lower price point stuff has been moving much better than the luxury market. So obviously this number can be skewed a little bit. Days on market up significantly from last year. We're seeing a lot of stuff sitting on the market, and specifically in the Blue Mountain, where we see a lot more luxury price points. Buyers in this category are being more cautious, and I would attribute a lot of that to them being oftentimes discretionary buyers. So they want to buy on our market, but they don't have to. Like, we're not talking about a lot of like families upsizing, downsizing. We're looking at a lot of recreational users and also retirees. So they want to buy, but they're maybe looking for a little bit more stability in the market and to be sure that prices are going to be stable before they transact. So I think the ice is starting to break on that. We're starting to see some more luxury price points go under contract here. So I'm looking for the Blue Mountains to rally quite a bit over the next month. So this is in contrast to Collingwood, which you see here. Collingwood was up 5.2% year to date. Months of inventory, we're dealing with 6.7. So, just slightly favoring buyers as compared to the Blue Mountains that was almost at 10 months. So that's really a good opportunity for buyers in the Blue Mountains and tough for sellers on price right now. Average price, as we saw overall in the Lakelands, down just under 14%, but that could change quite a bit in the next couple months. So Collingwood doing a little bit better than the Blue Mountains. Similar to what I just explained there, I think Collingwood's got a lot more inventory at more entry price points under 1.2 million, let's say, more families upsizing, downsizing. So more people that really have to move versus the Blue Mountains, where the buyers are a little more discretionary in nature. So to sum it all up, we're moving in the right direction. I think the March stats are going to get even better, and this positive trend is going to continue. As rates start to come down, there'll be more confidence restored to the market. So overall, I'd say that we've had a decent start to the year, getting much better, and certainly anecdotally, it's improving greatly over the past 2 weeks. So you'll see me again next month, where I expect we'll have much more positive data. But the great news is we're moving in the right direction. People are excited about the market again. We're starting to see things sell, which is a great positive sign. So we'll see you on the next one.